Hey there, welcome back to my channel Accounts Accuracy, and let's continue cash flow statement. In my previous videos, I have already explained you how and why the cash flow statement is prepared. If you have not watched my previous videos, please do watch it to understand today's video easily. But still, I'm revising a bit that what we actually do. In the opening balance of cash, either cash or bank overdraft, any of these three is taken, and in opening balance of any of these three, we add three activities, amount, and we get the closing balance. Remember, cash and bank balances are positive balance, whereas bank overdraft balance will always be negative balance because that's liability and other two are asset of the company. And for calculating operating, financing and investing activities, how we do, inflows get added and outflows get deducted, and all the balances get added together, and that gets added with the opening balance of any of these three, and then we get the closing balance of the same. Must watch the previous videos because it's been explained in detail in those videos. Now, operating activity. That means as we add these three activities, today we are going to study about operating activity. What is operating activity? This is quite lengthy process, so it may take few more videos to understand it better. But in today's video, we will only understand how to calculate the net profit before tax, because that's, as I told, it's a lengthy process. So we should go slowly. Now, net profit calculation is required because in net profit, we just add the non-cash items and non-operating expenses, and we deduct non-cash items and non-operating incomes. So expenses we add and incomes we deduct. And then we get the operating profit before working capital changes. Now again, all the increase in current liability and decrease in current assets get added, because working capital, that means it will involve current asset and current liability. So increase in current liability is added and decrease in current asset is added. In the same way, reverse we do. If current liabilities decrease and current assets increase, we deduct. All these we will understand better in my next video, and then we get the cash generated from operations, and in that we deduct income tax paid during the year, and at last we get the operating activities. Operating activities are those activities which get involved in day-to-day activity of the company. Suppose if company is manufacturing toothpaste, then the operations done for the manufacture of toothpaste will be the operating activity of the company. Now about all these steps, that is the non-cash items addition and deduction of incomes and working capital changes, as well as the amount of cash from operating activities calculation, we will understand in the next video. But in today's video, we will only study about the net profit calculation. This is also important to know how the net profit before tax is calculated. One by one, we will understand it slowly and steadily. Just see how the net profit before tax is calculated with an example. Now, here you can see this is the format of cash flow statement where the calculation of operating profit before working capital changes is calculated. This is a lengthy process, as I told. We have to do 3 steps before calculating the operating profit before working capital changes. But first of all, this net profit before tax calculation, which is done in the working note, is important to know, because once you know the exact amount of net profit, you have to mention here, then only you can get the real amount of operating profit before working capital changes. So let's see, and we are going to study the first step, that is calculation of net profit. In that, what we do, we just add the transfer to reserve. Why? Because reserve is also a part of net profit that we have already kept aside, but still that reserve amount is the part of operating profit which we keep aside. And again, the proposed dividend, interim dividend, all these are the part of net profit, because this is given to the shareholders when there is a grand or huge amount of profit company receives. Then there is transfer to tax. Tax is paid to government from the net profit value only. So that's why we need to add these 4 items to the net profit. Let's understand it better with the sum. Here you can see if in the sum you will be provided surplus, reserve value, proposed dividend value, interim dividend value and the provision for tax value. What you need to do, you have to add these all amounts in the surplus value. You have to find out the amount difference of 2-year surplus values. You have to find out this is the surplus of current year and this is the surplus of previous year. So from 3,36,000, 1 lakh we deduct. When we will deduct, we will get 2,36,000. So that will be net profit value 2,36,000, the difference between the 2-year amounts of surplus. Then we have reserve, general reserve value. Obviously, reserve, as I told, that is kept aside by the company for meeting the uncertainties of the future. That's why the difference is found out. Now from 1,50,000, you will deduct this 50,000, you will get 1 lakh. That 1 lakh should be added to the net profit because that forms the part of net profit. So 1 lakh get added. Then we are provided with the proposed dividend. Proposed dividend of previous year is only paid. Current year will be paid next year. So that's why we need to ignore this 80,000 but we need to add this 72,000 to the net profit value. So here you can see proposed dividend value, that is 72,000 got added. Next to that we have interim dividend paid during the year 90,000 and provision for tax made during the year is 1,50,000. These two values also should be added because this is also paid to the shareholders and provision is for tax is also a part of profit. So these two values will be added to the net profit. When we add these all items, we get the net profit before tax. It is very important. This is done in the working note. So for calculating cash from operating activities, we just need net profit and for that we need to know how to calculate net profit before tax. So this was a small sum but still it's the most important part of cash flow statement. You must watch my next video to understand how to calculate cash from operating activities. Please don't forget to subscribe my channel and hit the big fat like button because it motivates me to make some more videos for you.